Nobelift Group has dedicated 25 years to the industry, evolving from equipment manufacturing to system integration, and transitioning from a single product focus to a comprehensive industrial ecosystem. Nobelift has emerged as an industry leader with a global perspective. As the first company in China to offer a complete solution encompassing material handling equipment, mobile elevating work platforms, advanced conveying and sorting systems, AGV and its systems, supply chain integration software, intelligent automated warehousing and on-site logistics solutions. With its advanced research and manufacturing capabilities, Nobelift Group consistently broadens its business horizons. In the development journey of the mobile elevated work, in 2022, Nobelift Malaysia factory achieved large-scale production of mobile elevated work platforms, marking another milestone in Nobelift globalization strategy. Relying on a localized production and service system, we respond to global market demands with higher efficiency. Originated from Nobelift and built with ingenuity, strictly controlled from design to production, Nobelift mobile elevating work platforms accurately covers the mainstream working height, redefines high-altitude efficiency with all-round performance, and wins the favor of customers with safe and reliable quality. With 25 years of customization experience in the material handling industry, we can easily meet the customized needs of customers in the field of mobile elevated work. Its scissor lifts and articulated boom (MEWPs) have their own advantages and are suitable for different scenarios. Its sales network covers Europe, America, South Korea, Southeast Asia, and other regions, and is moving towards a broader global stage with excellent strength. Through the collaborative integration of two main business segments, material handling and mobile elevated work platforms, Nobelift Group has built an intelligent connected vehicle management solution for users centered around data-driven industrial internet, helping manufacturing enterprises reduce costs and increase efficiency with industry-leading integration levels. Nobelift Group builds end-to-end capabilities, aiming to lead as a global partner for intelligent intralogistics solutions across all fields. Forge a century-old Nobelift championing global efficiency.
Hello, I'm Peter Douglas, CEO and Managing Director of IPAF. Welcome to this special webinar marking the launch of IPAF's 2025 Rental Market Reports. Now in its 16th year, our award-winning global research, developed in collaboration with Carlisle, provides an in-depth analysis of the powered access rental market from 2009 through to 2026, with a dedicated focus on the past year, 2024. This year's reports cover North America, the top 10 European markets, the UK, France, Germany, Italy, the Netherlands, Spain, Denmark, Sweden, Norway and Finland, also China, and this year we are also focusing on two growth markets, India and Saudi Arabia. As a valued benefit, IPAF members in the rental, manufacturing, dealer, distributor or supplier sectors can once again claim one free report, now for the fourth consecutive year. To access yours, simply visit ipaf.org/reports, complete a short form and we'll send you the report to you as a digital PDF. In today's session, we'll first hear from Youdale, editor of Access International, who will share his global perspective on key trends across these regions. Then Ksenia Striapunina from Carlisle will provide a detailed look at one market in particular. This year we've chosen Spain to showcase the kind of insights that each country report will offer. These reports are more than data. They are a strategic tool to help guide investment, benchmarking, budgeting and forecasting, whether you're a rental company, manufacturer or supplier to the industry. Now over to Euan.
Hello, and thank you to IPAF for inviting me to take part in this year's webinar. Well, one of the themes of my talk in last year's rental report webinar was uncertainty across the markets. The word has taken on a new meaning this year as the rental sector faces a range of challenges, particularly in the world's largest rental markets, the USA, Europe, and China. Since the COVID pandemic, the Chinese access sector has been beset by a long list of challenges. Europe is a mixed bag, with southern countries seeing robust economies and rental sectors, while the conditions to the north are far more uncertain. And in the USA, we're seeing growth, even if it's forecasted to be at a low level. But let's not be too negative. There are bright spots and areas of growth, particularly in the two new additions to IPAF's rental reports this year, those being India and Saudi Arabia, with mind-boggling levels of investment to giga-projects in Saudi and unstoppable industry growth in India. While growth is expected to continue in the USA rental market, it is slowing. So says the American Rental Association in its updated forecast released this May. That growth, however, will be tempered by uncertainty due to potential changes in government policy under President Donald Trump's administration, which includes tariffs. The ARA's projections show a 4.2% increase in 2025, totaling $81.2 billion. And that's in construction and general tool rental revenue. However, this is a decrease from last quarter's projection of a 5.2% increase for 2025. Consolidation continues in the USA among the major rental companies. The big news of this year was Herc Rental's $5.3 billion deal to acquire H&E Equipment Services in February. The acquisition outbid United Rentals' earlier $4.8 billion offer and took much of the industry by surprise. Despite the setback, United Rentals demonstrated there is growth in the market, with its rental revenues increasing by 7% in the first quarter of this year. This was driven by demand across construction and industrial end markets. Another continued trend from last year is the move to specialty rental by the major USA rental companies, as they seek to avoid the cyclical nature of the construction sector. Specialty now accounts for roughly 33% of United's total revenues annually. As we all know, tariffs have been a big question. When Trump's tariffs were first introduced in April, JCB immediately reacted by saying it would double the size of a new 500,000 square feet factory under construction in Texas to 1 million square feet. A move to more localized production has certainly been a trend in the industry, both to avoid tariffs, which includes those imposed on mutes entering the USA from China in 2023, and to make production more efficient. One example is Zoomline Access. The company already has a factory in Mexico and is now considering a new plant in the USA or buying an existing mute manufacturer there. The idea of acquiring existing OEMs in North America and Europe is nothing new, but it is something we hear more and more as a potential tactic for expansion. Since the COVID pandemic, the Chinese access sector has been hit by a long list of challenges, including stalling domestic growth, a highly competitive rental sector, and the introduction of previously mentioned anti-dumping and anti-subsidy tariffs on mutes imported from China to the EU. According to Off-Highway Research, despite this, sales of construction equipment in China actually saw a 9% increase in 2024, but that was from a very low level of 2023, which was caused by the real estate market crash in the country. As far as the China aerial platform manufacturing and rental sectors are concerned, massive competition in the country has driven down equipment prices and rental rates to historic lows. Many in the sector believe that the country is in a period of reckoning, whereby the number of rental companies and manufacturers operating in the country are likely to reduce by a third in the next 3 years. However, in a recent interview with Access Briefing, the chairman of LGMG, Yu Sheng, provided an alternative view of the market. He believes the total number of NUPs operating in China will rise from 800,000 now to a massive 1.2 million in the next 5 years. And this, he says, will be driven by a rebound in the construction sector in big cities, but also by growth in the country's vast rural areas where access has not yet penetrated. Europe has been suffering too in recent times overall, with a range of different experiences across individual countries. One thing all EU countries have in common is the introduction of the tariffs on NUPs entering the Union from China. The final anti-dumping and anti-subsidy duties were officially introduced earlier this year. The new tariffs have prompted many new OEMs and manufacturing in China to rethink production, which is leading to more localized manufacturing strategies. Zoom Live, for instance, recently announced a 100 million investment, that's in euros, in a new Hungarian facility focused on new production. JLG has also accelerated its localization plan by moving product to its European locations. Looking at specific countries, the continent's largest economy, Germany, has been grappling with a diminished construction sector and a wider economy. Yet, on a positive note, the access rental market has remained stable in comparison. According to the German Construction Machinery Building and Material Plants Association, VDMA, its construction equipment market dropped by 31% in 2024, the strongest decline since the world economic crisis in 2009. But the worst may be over for the construction industry, says CC, as interest rates begin to fall and economic conditions improve. With this, a recovery is anticipated across the Eurozone during 2025 and onwards, driven by public investment, green policies, and infrastructure projects. By 2026, the pace of growth in the continent is expected to accelerate to 1.8%. EBI, Germany's National Rental Association, refers to a tense overall economic situation in Germany. The association's 2024 economic survey of rental operators reports a 7% decline in sales of rental equipment. However, it is forecasting a turnaround in 2025, with a 5% rise in the overall rental sector by the end of this year. And aerial platform companies have also proven to be resilient by the fluctuations of recent years. The BBI said there is demand for aerial access technology in almost all sectors, and declines in one sector are generally offset by other customer groups. And then there is the Bauma effect. The world's largest construction show in Munich during April attracted around 600,000 visitors, and there were more than 200 countries represented there. And this is seen as a real boom to the market going forward. The Nordic countries have perhaps experienced the most challenging environment of all the European markets in the last 12 months. Summing up the situation is Loxam in its results for the first quarter of 2025. Overall revenues for the company across all the markets it operates in were down almost 6%. Hardest hit were its Nordic markets, where revenues fell 11%. Loxam said market conditions in the region remain challenging, although revenues have at least stabilised. Looking ahead, the future seems brighter for rental. KPMG, which is the European Rental Association's market forecaster, said Finland is expected to recover strongly this year at 4% growth and 4.2% next year. Sweden and Norway, however, which both saw sharp declines in rental activity in 2024, are expected to stabilise this year, followed by 3.2% to 3.7% growth, respectively, next year. In contrast, KPMG says southern EU markets remain dynamic, with Spain, Italy, and Portugal all seeing growth rates of between 4.5% and 6.5% this year, and all exceeding 7% growth in 2026. Portugal will lead the way with a forecasted 8.7% expansion of rental activity next year. Spain, which is a special focus in IPAF's rental market reports this year, is also a star performer. The country's biggest rental company, GAM, reported a revenue increase of 9% in the first quarter of 2025 across the company, the rental and services division rising by 15%. And Mopic, Spain's Association for Manufacturers, echoed those sentiments with equally positive figures. Although the association did point to a labour crisis in the country, partly due to a lack of permits for foreign workers and an increase in material costs. And MOPIC also warned that the end of the government's recovery plan in 2026, which has been a major investor in public works, may also have an effect on growth. Nevertheless, MOPIC forecast a 3.5% increase in the sector over the year. Now on to two countries which are appearing in the IPAF reports for the first time, India and Saudi Arabia. In India, the market is not just growing, it is evolving, with rapid urbanisation, massive infrastructure projects, and a shift towards advanced technology. And it is outgrowing all other markets. And that's according to Off-Highway Research, the commercial vehicle consultancy APCG, in a recent report. After decades of being focused on China, winning in India is set to become the new growth battleground for all construction OEMs, they said. This is reflected by India's economy, which is one of the world's fastest growing. It's placed 5th in the World GDP Ranking 2025 list. The country is expected to see GDP growth during this year of up to 7%. The Aerial Platform Association of India was established in 2015 with 10 to 15 members, mainly focused on cranes. Today, membership stands at around 130, with a big focus specifically on aerial platforms. One of its members, Anubhav Ghosh, who was JLG's representative in the country for 15 years, and most recently founded distributor Nexa Global Infra Solutions, believes that the number of MUPs imported to the country will increase by 40 to 50% in the next 5 years to around 24,000 units. That will be up from the 16,000 units currently operating in the country. And other industry commentators have said it could even reach more than 40,000 units in this period. Either way, this is nowhere near the growth rate seen in China, which brought its MUP population to around 700,000 units in the same time frame. And there are a number of reasons for this. Ghosh says that while MUP manufacturing is growing in the country, it is not supported directly by the state, unlike in China. And as Rajiv and Ahan Seppi from India truck mount manufacturer Gemini Power Hydraulics point out, India is not heading for boom and bust. They say in India we have steady growth that will go hand in hand with the immediate requirements of the market. It only takes a glance at the latest data on the billions of US dollars worth of construction contracts being awarded in Saudi Arabia to get a sense of the scale of transformation underway in the kingdom. By the midpoint of 2024, nearly $150 billion of contracts have been awarded, according to analysis by the US Saudi Business Council released late last year. That was only a few $1 billion short of the entire total for 2022. And according to a Mead report, this is the highest total ever recorded by a single country in the Gulf Cooperation Council, GCC. The bulk of work has been triggered by the Kingdom's Vision 2030 programme, which aims to diversify Saudi Arabia's oil and gas heavy economy and invest in renewable energy, tourism, entertainment, culture, and sports. According to Day-in Equipment Rentals, based exclusively in Saudi Arabia, applications in logistics, entertainment, and facility management are also seeing major growth, such as the NEOM-related developments and large-scale concerts and sports events. On the green energy side, Day-in is seeing increased interest for electric equipment in urban projects and events where environmental regulations are stricter. And they say while adoption is still in the early stages compared to Europe, clients are beginning to request green alternatives. Massive development in Saudi Arabia is also attracting the international rental sector to the country. China's largest rental company, Horizon Construction Development, which has just acquired an 80% share of Malaysian rental firm Tong Heng, is a good example. Thus far, Horizon has moved into Indonesia, Vietnam, and Saudi Arabia, where it is integrating its sales and distribution networks and looking to expand. Nevertheless, there are challenges. While increased projects are often seen as a sign of healthy industry, they can have a knock-on effect in terms of the supply chain that goes beyond investing in fleet. Cost inflation has also historically been a factor and has caused some to consider buying equipment rather than renting. Taking the countries in IPAF's reports as a whole, there is no doubt we're in a period of challenge and transition. There is also a real sense of opportunity and the awakening of growth. Thank you for watching.
Thank you, Euan, for your interesting insights into this year's rental reports. Now over to Ksenia from Carlisle.
Hello everyone, and thank you for joining our webinar. As every year, Carlisle is preparing the IPAF MUP rental market report, which looks at the evolution of main market indicators in various regions: Europe, North America, and Asia. My name is Ksenia Striapunina, and I'm an engagement manager at Carlisle, and I will present an extract of one of our country reports. The estimates and market division presented in the MUP rental market reports are developed using a methodology built on triangulating data coming from in-depth interviews with market players, rental companies, but also manufacturers and other market experts, such as suppliers of manufacturers, association representatives, etc. We also use secondary information related to construction, rental statistics, and other macroeconomic indicators. IPAF has been partnering with Carlisle since 2009. We now rely on 16 years of historical MUP rental market data. And over the years, Carlisle has shown an excellent track record of forecast accuracy. The IPAF MUP rental market reports offer in-depth analysis of the MUP rental markets in Europe, North America, and China. This year, 2 new countries, India and Saudi Arabia, were also added to the scope of the study. For each region, Carlisle analyzes market revenue and growth trends, fleet sizes and expected evolutions, fleet mix, including alternative energy penetration trends. We also examine rental companies' investment fluctuations and observe operational indicators like utilization rates, retention periods, payback periods, and rental rates evolution. These indicators, trends, and forecasts are extremely useful for companies active in the market, rental companies, of course, but also equipment manufacturers, suppliers, and even investment funds, as they empower these companies to take informed decisions whether investment planning, growth strategy, or business orientation. So today we will present to you an extract of the Spanish report with a look back on the year 2024 and forecasts for 2025 and 26. Before starting, Carlisle and IPAF would like to thank all companies who kindly participated to the project preparation and estimate development. The Spanish MUP rental market saw strong growth in 2024, in line with earlier forecasts. Let's take a closer look at market indicators and how they have evolved in the past couple of years. Following a booming 2022 and 23, the rental market continued its strong performance in 2024, with a 6% year-on-year increase, bringing the total value close to the 400 million euros. The increase in rental revenue was driven by both high rental rates and fleet expansion, reflecting sustained market demand. Revenue continued to rise, supported by ongoing fleet investment and solid construction activity, but the overall pace of growth has decreased. While the outlook remains positive, expectations are more cautious than in previous years, with growth projected to continue at a slower pace due to a cooling economy and softer MUP demand. Cross-hire declined in 2024 as larger fleet sizes allowed rental companies to rely more on their own equipment. However, a certain level is expected to remain due to sustained high demand and strong utilization rates of MUPs. Before reviewing fleet size, I would like to remind you that we exclude low-level access equipment from our scope. In 2024, MUP rental fleet size went close to 50,000 units in Spain. Overall, it increased by around 7%, adding another 3,000 units to the country's total MUP rental fleet. Investment levels have eased compared to previous years, as most fleets have already been renewed. While ongoing investment will be needed to support growing demand for electric equipment and new applications, no significant increase beyond current level is expected. Spain also continues to report the highest share of used equipment purchases among the European countries studied, maintaining a 15% share in 2024. Rental companies often source used machines from neighboring countries or transfer units from their branches abroad. The Spanish fleet is forecast to continue growing in 2025, although at a more moderate pace. By the end of 2025, the fleet size should get closer to 51,500 units. In 2024, MUP utilization rates rose slightly to 64%, with no significant difference between scissors and booms. Strong market demand and recent fleet expansions largely offset each other. Construction remained the primary end-use sector, while warehousing and facility management continued to grow as an important source of income for rental companies. Looking ahead to 2025, utilization may decline slightly as ongoing fleet growth continues to absorb increasing demand. Rental rates rose by 3% in 2024. Companies are aiming to raise rates further to recover investments made in the last years and to adjust for inflation, and are enhancing their service offering to remain competitive. While average revenue per unit had previously increased in line with the post-pandemic recovery, this upward trend stalled in 2024. Despite rising rental rates, further revenue growth per unit is now constrained by continued fleet expansion and intense market competition. In 2025, rental rate increases are expected to continue at a similar pace. We just took a close look at the Spanish market, but I would like to share some general trends regarding the rest of the world. In 2024, the European MUP rental market recorded revenue growth of 3%, reaching a turnover of €3.5 billion. While this marked a continued positive trend, it fell short of earlier forecasts due to the rising interest rates, persistent inflation, and delays in public infrastructure spending. Outlooks for 2025 and 26 remain positive, though growth is not expected to exceed 3% per year in the coming years. This cautious forecast is closely tied to the performance of the construction sector and the overall economy. Continued investment in infrastructure and construction projects will sustain demand for MUPs. However, the market expansion is likely to be tempered by ongoing competition, fleet growth, and economic factors such as inflation. In terms of equipment trends, electric models continue to gain ground across both scissors and boom lift fleets. European MUP fleets are already highly electrified, with the main remaining barriers linked to the limited availability of suitable electric solutions for rough terrain or higher reach categories. In 2024, the United States MUP rental market marked the end of its recent high growth cycle, with revenue increasing by just 1% year-on-year. High interest rates, rising construction material costs, and broader economic uncertainty weighed heavily on the market. China MUP rental market saw a significant downturn. Fleet growth slowed down, and both utilization rates and rental prices fell sharply. Despite ongoing expansion by leading companies, the market faced oversupply and weak demand, while intensified competition further reduced rates. In the meantime, the MUP rental markets in India and Saudi Arabia are growing rapidly, driven by large-scale infrastructure projects, increasing safety regulations, and a shift toward rental over ownership. We hope that this short presentation answered some of the questions you had. More elements will be available in the IPAF MUP rental reports, which will be released in June. More specifically, you have the option of ordering several report packages: Global Report in all countries, Global Report in one country, Individual Country Report, including the North America report. All the information is gathered on the web link shown here. Thank you very much for your attention and have a nice day.
A big thank you to Euan and Ksenia for their insights. As you've seen, these reports offer detailed, actionable intelligence for your specific market. If you haven't used them before, I strongly encourage you to explore the value they offer, particularly for planning and investment decision making. As a reminder, IPAF members who are rental companies, manufacturers, dealers, distributors or suppliers can claim one free report. To order these, visit ipaf.org/reports. Thank you once again, and we hope that the reports help you navigate the year ahead with some confidence. Thank you.